this is Mike with the NetPicks Options Fast Track. Over the past couple of weeks, we've seen some incredible volatility in the markets. If you've been active over the past couple of weeks, you know exactly what I'm talking about. We've seen some pretty large swings back and forth, and some of those swings have even happened intraday. So during the middle of the session, we can see 2, 3, 400 point swings back and forth. It's been a pretty wild ride, a lot of things to keep track of. What I'm going to walk you through over the next few minutes, I'm going to walk you through some of the trades that we just closed out here over the past week or so. We've had some incredible profits, especially just the last couple of days. We ended the week on a very positive note on many of the names that we trade. So we'll go ahead and walk through those in just a second. Before we get there, let's just take a quick peek at the overall market. You can definitely see how conditions have changed since the beginning of this year. If we go back to January 1st, look at how the sizes of these candles here, the ones that I'm circling right here, look at the sizes of these candles compared to what we saw most of the fourth quarter of last year. The ranges that we've seen intraday, we've seen a lot of movement. Okay, we've also seen a lot of overnight gaps, meaning, from the close one day to the open the next day, we can potentially see 200-300 point swings. That makes it very tricky. Okay, because even though the market can move overnight, we can't trade options overnight. We can only trade options from 9:30 to 4. So it's been a tricky environment. The good news, and what I want to show you today, is the system's pretty flexible. Okay, even though the market's throwing a lot of things our way, we can react pretty quickly here with the fast track indicators, and you'll see that in just a second. So what is my takeaway from this chart? I'm not trading off of the daily chart, but I like to look at it to place overall context of where the market's been and where we could potentially be heading. It helps me determine how aggressive or conservative I want to be. So when I start to take a look at a market like this, where we have some very large bodied candles, a lot of large ranges back and forth, the market's basically giving us a warning signal. As much as we all want to be jumping in with both feet, booking a ton of profit all the time, the market's telling us, hey, it's time to be conservative. Okay, we still want to be active in the markets, don't get me wrong. We still want to be taking a lot of trades, but we want to take them with smaller position sizes. We want to take a lot of vertical spreads. That allows us to control our risk really, really well. So when would I ramp up my size? When would I get more aggressive? If I can start to see some of these candles settle down a little bit, some of the sizes of the candles get a little bit smaller, if we can start to see a trend develop where we get a move up or down for more than a couple hours at a time, if we could get a couple of days in a row in one direction, then we know we're starting to settle back into a normal environment. And that's when I would start to ramp up my size, maybe take more long calls, long puts. But until that happens, I'm going to continue to be as safe as possible. So let's go ahead and load up the charts and take a look at some of these trades that we closed out to end the week. A lot of the movement here, the last couple of weeks, a lot of the movement, the market's been taking its cue from energy and from financials. Over the past number of weeks, we've had a lot of earnings releases come out. We just had Janet Yellen testify in front of Congress on 2 days of this past week. We've had a lot of news events. Okay, so with the movement back and forth, with all of these catalysts to get the market moving, how have we handled it? Well, the financials, they definitely take their cue from interest rates and any of these central banks worldwide, anything that they say. So the financials have been active. Crude oil, the price of energy, as you've probably seen with the price at the pump, energy prices have been beat up for months now. So those areas have really been leaders as far as the overall market goes, and we'll take a look at some of those trades that we closed out. But let's go ahead and start out with the Dow here first. You can see the VIX over here on the left-hand side, the volatility index 25.4. Anytime you start to see the VIX in the mid to upper 20s, we know that options are pretty expensive. There's some fear in the market. And when we start to see the VIX elevated like that, we tend to trade a lot of vertical spreads because it starts to limit the effect of volatility. Don't get me wrong, even when we're trading spreads, we're still going to be impacted by volatility, but we're able to soften it a little bit, soften the blow a little bit from movement and volatility. So that's why we trade a lot of spreads in higher IV environments. So when we take a look at this Dow ETF, symbol DIA, these are just the trades that were closed out this past week. We had 3 trades. We had a trade that triggered in towards the end of last week, last Friday. We carried it into Monday morning. You can see this short trade. We did close out of this trade first thing Monday morning. Let me shrink down my quotes screen so you can see it a little bit clearer. So the reason we got this short setup, we got overbought towards the end of last week. Remember, when we get overbought, we're not looking for a big sell-off for weeks on end. We're just looking for a quick pullback. And that's exactly what we got. We got to close below our signal line, short trade triggered in. Okay, give us multiple opportunities to catch this trade. It wasn't one of those trades where you had just a few minutes to grab it. We had plenty of time before the trade triggered in. First thing Monday morning, always nice to start out the week when you can book a profit. And when you're ringing the register right off the bat, it's a great way to start your week. So long put spread were the two options for taking this trade. We've been trading some of the March monthly options. We've been going out farther in time just to give us more time to be right, just in case the market does settle down. So we're looking at a really nice return there, and basically one trading day. I mean, we're taking a look at $200-300 worth of profit here, depending on the type of strategy you use. So that's a lot of profit to start the week. Great way to start. We followed that up. The market got a little oversold Monday afternoon. We went into Tuesday, and we had this long setup here. Unfortunately, this long setup, it triggered in right at our entry point, the first dot. That trade triggered because we got oversold in the near term. We got to close above our signal line, and that entry point was hit. We came up, we hit our first target, stop went to break even. We then initiated a trailing stop. And on Wednesday morning, we had one little pop to the upside, and unfortunately, we just missed out on our full target here, and price action pulled back. It took us out with a partial profit. I'm never going to complain about a partial profit. Okay, as much as I would love to hit the full second target every single trade, we know that's not realistic. So the good news, before the market got nasty Wednesday into Thursday, we were booking our partial profit. So there again, another profit. That's two trades on the week for the Dow at that point, and we had a really nice return. Notice we did get oversold here as well on this move to the downside. Okay, so to wrap up the week, Thursday into Friday, we had this long setup. It triggered in Thursday afternoon. And come Friday, just before the close, Friday afternoon, we had already hit full target. So here's another trade. Our third trade on the week that we closed out for a profit. This one was another full profit. So if all you did last week is trade the Dow ETF, okay, we're literally talking about hundreds of dollars of profit, depending on whether you're trading long calls and long puts or vertical spreads. We could potentially be talking about $1,000 worth of profit just on one symbol. Okay, now how did we know to trade the Dow ETF? This is a name that we trade all the time. We don't flip back and forth between symbols. The Dow ETF has been a permanent fixture on my list for the last number of years. So we no longer have to guess when it's going to move and when it's not. We're taking all trades as they come on this symbol. So now heading into next week, we're flat. Okay, we're just going to wait for the system to identify another overbought or oversold condition. A lot easier to do that, a lot easier to sit on hands and be patient for the next setup when you're coming off a great week like we just had on the Dow ETF. Now, I mentioned that financials and energy have been really big market leaders. Let's take a look at some of those financials. Let me take a look at Citigroup. So the key here is the system remains the same. You're going to look at the same indicator set here on Citigroup that we did on the Dow. Right? We're still looking for overbought, oversold extremes. So we got oversold down here on %R. We got to bounce above our signal line right here to end the week. So this one had triggered in Friday morning. We had already hit full target by the close Friday afternoon. That's not typical for us. We're not typically looking for day trades, but when they happen, it's a winning trade. We'll definitely take it. For those of you that have an account size less than $25,000, you probably know that you're subject to the pattern day trading rules. What that means is if you have an account size less than that $25,000 mark, you've got 3 day trades within a 5-day stretch. Once you hit the third day trade, they're going to cut you off. You can't take any more day trades at that point. So ideally for us, we don't want this to happen very often, but as you guys know, when we start to see 300-point swings back and forth throughout the day, like we just saw on Friday, we're going to have those day trades from time to time. So we did ring the register. It's not typical, but Citigroup had an extremely strong day. Citigroup was up over 7% on Friday. That's a pretty unusual move. So I don't want you to think that, hey, this is a day trading system. It's not. It's truly a swing trading system. We just happen to get an extreme move on Friday to end the week. So that was our one trade of the week on Citigroup. A one trade, one full winner, will definitely take it. Wells Fargo is another one that we trade. We have a custom trade plan for Wells Fargo as well. Again, system remains the same. Same indicator set. Okay, looking for the same criteria in a setup. We had two trades this past week. We had a partial profit on our long trade here. Okay, we got oversold, got to close above our signal line. The calculator gave us a setup. Unfortunately, we just did not hit the full target. So we got taken out with a very small profit here. Nothing huge. And then we followed it up. We triggered into another long setup. We gave it a second attempt on Thursday afternoon. That one triggered in, and Friday afternoon we had already hit full target. So there's another full winner. A lot of people like Wells Fargo because it's a $45-50 stock. The options are a little bit cheaper. That's pretty attractive to some of you with a smaller account size, which is perfectly fine. So nice full winner there on Wells Fargo. The last financial that we look at, Goldman Sachs, a little bit expensive for some people with a smaller account size, which it's fine. If you can't trade it, we just showed you a couple of other candidates. So let's go ahead and zoom into the trades from this past week. We had closed out of a couple of full winners last week. So last week we had a winner on the downside, we had a winner on the upside, and then coming into this week, unfortunately, we had our break-even trade on the long trade right here, and that was our only trade of the week. Heading into next week, we potentially have a new long setup that's printing, so we could potentially play the long side, but a pretty quiet week, all things considered, on Goldman Sachs. And you'll typically see that. I mean, coming off of the previous week where we saw some great movement, we had two full winners. A lot of times, the following week, you do get a quieter week, and that's exactly what we had on Goldman Sachs. The good news, if you're setting up a diversified list, even though Goldman Sachs only had one trade and it was a break-even trade on the week, we had some great movement over on Citigroup, on the Dow ETF like you saw. So we were still extremely active on some of the other names that we track. Let's take a look at energy. So we took a look at the financials leading the market back and forth. Energy also had a pretty active week. So here is Chevron. Let's zoom into the chart here on Chevron. All right, so we had one trade on the week on Chevron. We've had an amazing stretch. We had 6 full winners in a row on Chevron going back to the first of the year. So we've just been booking profits left and right on this one. We did have a quieter week here. We had one trade on Chevron. It was a move to the downside, hit first target, and did end up getting taken out at that break-even point. So, no harm done. We're now flat heading into next week. We're just waiting for the next fresh setup. And this is a lot of times what you will see. When you see 6 full winners in a row, for over a month, it's swinging back and forth. A lot of times those stocks will start to settle down a little bit. They will start to consolidate. That doesn't mean we're just going to throw them to the curb because we know, they've been very good to us. It's just we have to wait for things to kind of digest a little bit after the great movement. The good news is just because Chevron's quiet, that doesn't mean that every other energy name on our list is quiet. Let's take a look at Halliburton. Let me zoom in so it's a little bit easier to see. So Chevron had a quiet week. Halliburton had a great trade to the downside. You can see a great short trade triggered here at the entry point. Hit first target, stop went to break even, and our full target was hit. So how are we taking some of these trades? Whether we're playing the long side or we're trying to play the short side, we're looking at either long calls and long puts or long vertical spreads because we're looking for quick pops back and forth. We're not looking to take positions for weeks on end. That's not our style. We're looking to be in for a couple of days. And a lot of times, the long calls, long puts, and long vertical spreads, those types of trades give us the best bang for our buck. Okay, so that's how we're taking a lot of these trades. And we're targeting, typically we're looking for between 40 and 150% returns. It seems like a pretty wide range. That's because with the vertical spreads, they're going to give you a smaller return. They're also going to leave you with less risk, so there's a trade-off there. The 150% returns could potentially kick in if you're trading long calls and long puts and you get a very quick move in your direction. So there's a wide range, but I like that because if I want to be more conservative, I can trade the vertical spreads. If I want to be more aggressive, I can trade the long calls, long puts. There's a little bit something for us to do for regardless of your outlook for the market. What about some of the high flyers? Let's take a look at CMG. This is Chipotle. I know it's very expensive, but some of you have a larger account size. The nice part about trading options, even though it's a $500 stock, the options allow us to get in, and control 100 shares for less than $1,000. So it's still great leverage. And you can see we had one trade this past week, a trade to the upside, and there's a ton of profit in here. Okay, this move to the upside, even taken with a call spread, I mean, we're talking about hundreds of dollars of profit. So that's a very big move. And again, the flexibility of the system. We've gone from an index ETF in the Dow. We've taken a look at some energy products. We've taken a look at some financial products. And now we're taking a look at a high flyer like Chipotle, a food stock, right? So the flexibility is definitely there with the system. And now we have a short trade setting up for next week. So our plan of attack for early next week, we already have that short trade that's printing. So we could potentially be looking to play the downside. Again, we don't care if the market heads higher or lower. There's always going to be something for us to do. Google, let me zoom into the Google chart here. So on Google, looking back at last week, kind of a mixed week. We got off to a very good start. We had this long trade that worked out great for us. You can see a full target was hit on the long trade, so a lot of profit there on the call spread. We then followed it up towards the end of the week. We got into this short trade Wednesday into Thursday. We triggered into a put spread here and never really made much progress. And it's pulled back. We're underwater on this trade. Okay, we're taking a little bit of heat. We haven't hit any stop levels yet. Our stop's up at 722.50. Our targets are in place down below us. So this is a test of patience here. We've got to trust the system. Just because we're underwater does not mean we're just going to jump out. We're going to stay patient here and wait and see if we can get some of those targets to be reached early next week. We'll see where the market opens. So we'll show you the good trades. We'll show you the trades that are underwater. We're just going to show you the long-term performance of the system. So with stocks so active, what about bonds? I mean, we've seen a huge move in the bond market here over the past couple weeks. Typically, you get the bonds to pick up when there gets to be fear in the equity market. Typically, bonds move inverse. So as equities move lower, bonds typically move higher. Now you add in there some of the movement, and the Fed this week, Janet Yellen started to talk about potential negative rates here in the U.S. As a result, that's the catalyst that the bond market really needs to get some movement. So we've had a pretty big move to the upside. We did have a couple of trades here this past week. We actually had this short trade from last week that ended up stopping out. That one didn't work for us. But we did follow it up with a full winner to end the week. Thursday into Friday, you can see we gave it a second attempt on the downside, and we did hit a quick target. So those long puts, the long put spreads worked out really, really well there. So you can see, I mean, we're looking at a variety of different markets. The key to trading successfully is you want to make sure you're diversified. Regardless if you're trading a $1,000 account or a $100,000 account, we want a good broad list of products. Some ETFs, which we've taken a look at, some individual equities, different sectors. We've now taken a look at bonds. So we're all over the place, and that's by design. We've had winners, we've had losers, we've had break evens this past week. All in all, we had a very profitable week. So don't get intimidated by what you hear over the weekend. If you're looking at Investors Business Daily or the Wall Street Journal or just looking at things online, you're probably going to see things about fear kicking up and the market potentially collapsing. Don't get intimidated by that. As long as the market's moving, look at the profit that I just covered over the past 15 minutes or so. There's a lot of money to be made here as long as you have a system in place that gives you that exact roadmap to follow. Right? So heading into the next couple weeks, what's going to happen? No one knows. I have no idea. Nor do I care. As long as the market's moving back and forth, the system's going to continue to identify trades for us, the exact entry points, targets, and stops, and I'm just going to continue to take risks that I'm comfortable with. And that's all we have control over. So I love the market conditions right now. It's perfect for what we look to do. If you have any questions at all on our style of approaching the markets and how you can get started, we'd love to see you join our team. Feel free to send me an email. Mike@netpicks.com is my direct email. Be more than willing to connect with you here in the upcoming week to discuss the program in more details. So keep in mind the markets are closed on Monday. So we'll be back Tuesday through Friday next week, taking a look and see if we can book some more profits here from the market. So everybody enjoy your weekend, and I'll be back with you guys next week.